Hi, I'm Whack.
Hi, and I'm Pat, and this is another episode of the Weekly Orbit, the week ending Friday, November 10th. Whack, is the bear market over?
I hope so. I don't know. I think so. Well, the angle that I have is the bear market was over in the summer of 2022 for Ethereum because that's when we hit $880. That's when Rocket Pool hit like the RPL token hit $7.50. That was the bottom. Like since then, it's been a bull market. Like that's the way I'm seeing it. We're up like 4x for RPL. We're up like over 2x for ETH. That's a bull market, right? Like that since then we've been in a bull market. So that's my optimistic understanding of that.
Well, let's hope you're right. We're going to jump right into some market talk, but what got the markets really going, I think, in the last couple of days was the release of this statement from I think it's the Secretary of State of Delaware, where the iShares Ethereum Trust was registered by Blackrock. And this is a prelude to step one if you want to set up a ETH ETF. This is the first thing you do. And the last time BlackRock did this, 7 days later, they submitted their paperwork to the SEC for their Bitcoin ETF. So this really got the engines running, and RPL did the same. Does my face look a little red this morning? I'm just wondering because the the face melting 20% gain RPL yesterday is just ripped. We started the week Whack at let's see, we're on our 7-day chart. In U.S. dollar terms, let's look at the ETH terms first. We started at a ratio of 0.0129, and we are currently at 0.01553. And I did the math before we started the show, and that's about a 20% gain against ETH in ETH terms for the week. In U.S. dollar terms, we're up about 39%. So it's been just a trailblazer week, Whack, for both ETH and RPL.
Yeah, I think you led with the question like, is the bull market back? I think what happened is for a long time people didn't believe that we wouldn't see lows again, or they didn't believe that we would see the bull market, right? And like they didn't know what was going to happen. And like now with these shifts out of ranges that we've been in, and with the changes that have happened in the market structure, I think people have really started to believe that the bull market is back. So Bitcoin moved a few weeks ago with the idea that the spot ETF was going to be approved, and then with this application for the Ethereum spot ETF from Blackrock, which is the gold standard in ETFs, then people started to think, yeah, the Ethereum one's coming too, and oh no, we're out of position, we're not allocated properly. We need to fix this right now, and that's kind of what we've seen so far. I think it's really going to be interesting to see how these next few days go, about whether we can kind of build on that or whether we're just going to stagnate and maybe drop down a little bit more from here. One thing to remember, right, even if the bull market is back and we're in the bull market, then it doesn't mean that it's going to be a straight line up. Like
Right.
it goes up
The
and
wall
down.
of worry.
Yeah, you got to climb that wall of worry, right? And that's going to take months, weeks, months, maybe even a year. Who knows how long it's going to take to get up there? And only once after Bitcoin and Ethereum are past their previous all-time highs, that's when you know that there's good stuff ahead, and we'll have an idea of just how good that is going to be. But it's been a wonderful week in crypto and in Rocket Pool especially. I feel like the sentiment has shifted entirely from like doom and gloom and like seeing a dozen red weeks in a row to now starting to see some green weeks is really uplifting everyone in the community.
Yeah, the low liquidity, we talked about this before on the downside of RPL, and then you see the upside, how it can really move. It's like riding like a bucking bronco, the way it's up and down, up and down.
Yeah,
So for all those who've stuck with it, congratulations. Hopefully we're kind of nearing the end of the bear here and starting a new phase.
yeah,
Just to take a look at RPL compared to Lido. Lido had a great week too.
yeah,
In US dollar terms, they were up 24%. And I did the math on ETH terms. I think they were up, I think it was 13% against ETH. So RPL outperformed both Lido and the market in general. So But I was like comparing it to Lido because it's kind of an apples and apples comparison because they're also the staking provider.
Yeah, so in the last week, RPL was actually number 8 in terms of tokens that gained value in the top 100. So it's had a really good week.
Yeah, it has.
Yeah.
Moving on to some more stats, some other good news, deposit pool. I think last week when we talked, deposit pool was overflowing. We're at 23,000 and change. We are now down to just right around 18,000. So we've had some, I think, some people breaking down their 16 ETH into LEB8s, which have been eating up some of that overage. There has been some examples of the Rocket Arb being taken advantage of this week, where it was just below 18,000, and then people were able to utilize that feature that Romana made. So, any thoughts on the deposit pool in the last 7 days?
Yeah, so Prisma Finance is a new borrowing lending protocol based on liquidity, or kind of inspired by that, I guess. And they really drove demand for our ETH last week. So we got a big premium, but no one was able to use it. It went over 1% at one point, but you weren't able to use it because the deposit pool was overflowing. And then Thomas started a whole bunch of validators and other people also, but that really ate a big chunk out of it. And then in the last couple of days, we hit that sweet spot where the ARB was possible. Yesterday the ARB was possible, but the gas fees were too high, so it wasn't worth doing it. So there's always something, And then right now, I think there's one validator that exited, got added back to the balance. So technically the ARB isn't possible right now, but it's going to be quite easy to be able to ARB that one back again. So hopefully over the weekend we'll keep a little bit of that premium. There's not that much left of it now. When I saw it earlier today, it was like 0.2%, which isn't really that much, but it might pay your gas back depending on how much gas cost is. So over the weekend, maybe if gas prices come down enough, we might see that premium go away, which is what I thought would happen very quickly after it would become available to ARB.
Right, and we were talking earlier. There's expectation that the Rocket Arb will be added in, perhaps to the smart node in the next version, which would help node operators. It automate the process a little easier than it is now, where you have to manually run the script. Is that right?
Yeah. So the script, manually running the scripts was like in the first iteration, and then some community members made a Docker image for it. So if you install the Docker image, it makes it a little bit easier to run it. There was talk of incorporating it as a sidecar project onto the smart node stack. However, the last I heard of that was many months ago. So I think people kind of realized that Docker image was good enough and most people could get it to work. So it's kind of gone quiet on the making an official sidecar, but I don't know if that might still be happening, but I've not heard anything about that for a while.
Okay. Our last stat is this week we had the 1 millionth validator enter into the Beacon chain. And I just want to mention that because that's a pretty good milestone. And the chain started in December of 2020 or 2021? I can't recall.
December 2021 is when the Beacon chain launched. And then things went absolutely like off the charts in after Shanghai and Capella this year. So that's when things really sped up.
So we're about at two-year anniversary almost, and we got 1 million validators on the chain. So congratulations, Ethereum. And
I'm sorry, 2020 is when the Beacon chain launched. 3 years we're coming up to.
Okay,
yeah,
that makes sense because Rocket Pool is celebrating its 2-year anniversary, and it launched 1 year after.
Yeah. Sorry about that.
Speaking of that, we have some really exciting Medium posts here by Dave from the Rocket Pool team. He kind of maps out the roadmap for 2024. Let's take some time to go through this whack because there's some real good alpha in here. First, it has been 2 years since Rocket Pool launched, so congratulations. It goes through some growth numbers. Our ETH growth has been phenomenal. But we also, let's get down to Houston because that's the next protocol upgrade. And I'll just read a part of this. The upgrade will be introducing some exciting features that will allow new integrations and platforms to be built into the protocol. Some of these include the ability to stake ETH on behalf of a node. So this is indirectly talking about node set, right? Because node sets can be built almost on top of Rocket Pool. And this Houston upgrade will allow node operators to run node set validators. Is that correct?
Yeah, it's also like going to make marriages a little bit easier because currently the way marriages work is that it's really the ETH holder who can run the node, but it might change marriages to make it in a way that even the RPL holder will be able to manage the node because they'll never touch the ETH part of the node. So it's really interesting how it's going to bring up some really fun possibilities, and like it will help node set for sure, but it's also going to help other people in ways that we can't really think of right now.
Nice. The other thing Houston's going to integrate is a fully on-chain DAO to govern the protocol. And could you explain what's the advantage of this, and why are we spending a lot of time working on the voting to be on-chain? Does that help decentralize the protocol?
Yeah, okay, so the couple of things to go over first of all is on-chain voting is already a thing. Like there's a bunch of different services that help you do it, like Tally and I think Aragon, and a couple of other places as well that kind of like help you do it. The thing that makes the Rocket Pool the Rocket Pool governance unique is that it's not one token, one vote like lots of other protocols. Like most of the protocols, it works with your node operators. So you have to be a node operator to be able to get a vote. And then as a node operator as well, there's like certain formulas that go into it about your vote power. But that kind of presents a unique situation that at the time when Kane and the team started working on that, there wasn't an off-the-shelf solution, which might exist now because there's been some talk of some of these services that have added modules and stuff that you can kind of like tweak to make it applicable. But the team had already kind of finished the work by then, by the time that was developed. So now what is the purpose of this, right? Why are we doing this? So right now when you pass a vote, the vote is something called off-chain. So that means that people vote on snapshot and that carries no weight. So even though the vote has passed and the community says this is what we want to do, there's no way to make the protocol do that, if that makes sense. There's a buffer in the middle called the Guardian wallet, and that is a wallet that's controlled by the team. And then that wallet is the one that will then go and make the changes needed to the contracts to enact the vote result. So that is kind of like a man in the middle. And the whole point of crypto is that, we want to kind of remove those men in the middle kind of services and features. And we want to remove those because they are a centralizing force and a force of control. So the main thing that the Houston upgrade is going to do is remove one of the last big blockers to true decentralization for Rocket Pool with removing that Guardian wallet. So now when there is a vote, it will happen on chain, and as the vote passes, then the code that was built into that vote will automatically get executed onto the contracts. So that's where the change will come from the community itself. There won't be anyone or anything in the middle to execute that code on the community's behalf. So that's where that comes from. So, this isn't like on-chain voting is not a unique thing. Like loads of protocols do it, but it's just the way that our node operator set and the powers and the different kind of voting they use. That's the unique part that meant that we had to make a bespoke solution instead of getting one off the shelf.
So, as an example, if with the on-chain voting, the PDAO will all vote on, say, a protocol upgrade, that will then take effect automatically. We won't have to rely on then the team to actually do it, or does it automate that process?
Yeah, and then there's also I'm not sure exactly of what the flow will be like because some of the things have to be approved by the ODAO as well. So there'll be intricacies that are built into that. Like it's a little bit beyond my technical understanding to kind of like really get into those nitty-gritty details of it. But all I know is that this will be removing certain centralizing forces that are kind of in the middle there. it'll also be introducing a security council. So there'll be a certain number of people who'll be able to kind of like put the brakes on things, which is really important because there might be something malicious that's caught, like a bug or some kind of potential exploit, and then the security council can just lock everything down until that's fixed. So I think that's going to be introduced with Houston also.
Yep, that sounds good. Let's move on to the next upgrade that's coming after. It's going to be called Saturn. So I think this is going to include megapools, which we'll talk about, and it's going to reduce perhaps the mini pool. The minimum mini pool is 8 ETH right now. We talk of reducing it down to 4, and then perhaps even down to 1, depending on some further research. And one of the news items here, Wack, was I think there's been talk of expectations of maybe Q4 of 2024. This said Q2. That seems a much more aggressive timeline than a lot of us were expecting. I think forced exits, which would require a protocol upgrade on Ethereum, was the thing that was kind of pushing this back. But in the blog post, it says we may need forced exits from the Ethereum protocol. So do you have any insight on the timeline being moved up, or are we still trying to find out?
I don't, because just this week, I think at the end of last week, I was talking about how, the timelines for future upgrades might need to shift. And that was based on some of the things that Langers was saying to Jasper in the community call. And, we got this news that, there was the idea that we were going to have 2 future updates, Houston and Saturn, and how that might need to be broken down into 3 future updates, where we're getting Houston in Q1 of 24, and then another yet to unnamed update with like some quality of life improvements that would come in Q2 or Q3 of 24. And then, what we think of as Saturn with the mega pools coming in potentially Q1 of 25, but not still kind of tentative about those timelines. So when Dave wrote this post and said Q2 for Saturn, that really made me perk up my ears and be like, whoa, okay, that's really interesting, because I'm not exactly sure how that would happen. So I'm really curious to see how that's going to work, and I'm trying to gather all the information that I can about it. But I'm really curious to see how that's going to happen.
Let's talk about the mega pools part of this. On the Launchpad, when you were speaking to Ken last week or a couple of weeks ago, during your conversation, you guys were talking about mega pools and how that can help really hyperscale the protocol. In fact, if you run the numbers, if everybody converted over to lower bond, I can't remember if it was 4 or 1 or 2, but we could hit 22% cap that the protocol has said we will limit the growth of the protocol to 22% of all the staked Ethereum. And I was blown away by that. I didn't realize that is the type of scaling we're talking about with mega pools. And that doesn't even include NodeSet, which is we've talked about before.
Yep.
So between NodeSet and mega pools, the amount of market growth we could see could hit double digits or possibly even the cap. Could you elaborate on that a little bit? Because that's really exciting news.
Yeah, so when Atlas went live, right before Atlas, we had around 15,000 validators, right? And the idea was that with scaling, you can make your ETH so much more effective, right? So with previous the original staking, we had 1 ETH that the node operator provided was helping lift 1 ETH. With Atlas, it went to 1 to 3. So if you provided 16 ETH, you could do 2 LEB8s, which would then bring up 48 ETH for the protocol. Now, as you work that out, for LEB4s, it would go to 7x efficiency improvement. With LEB2s, it would go to 15x improvement. And then with LEB1s, if that existed, that would go to a 31x improvement. So if you get 10,000 validators, for example, and make those 31 times more efficient. If everyone converted and was able to get to that maximum efficiency level, that would then take you to 300,000 validators.
Oh my
So
gosh.
that, that's where the idea comes from, right? It's like, that's how the hyperscaling would work. And that's just giving you a very, 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 like, quick example of a rough example of what it would be like. There'd be
Right.
certain efficiencies and
Yeah.
like different thresholds and stuff that you would do that would limit that scaling somewhat. And we don't even know if the one ETH is possible, and it's still being explored as one ETH. But the two ETH seems like it's doable with some changes from Ethereum, like the max slash, like inactivity leak, like forced exits, all of these kind of things that we're hoping will come in the update after Cancun. So potentially, Q4, end of Q3, Q4 2024, if the Ethereum, if the protocol core developers are keeping that like 6 to 9 month cadence, that's what we're kind of hoping that we'll get. But that will really like rocket boost, rocket pool. So that's kind of how we could hit that 22% mark, like potentially within a year and a half, I think. Potentially.
Yeah. I mean, we're currently the market. I think we're at 3% of the market. So
Yeah.
going up to 22 would be just a massive, huge, huge growth.
Yeah.
Perhaps with the Q2, maybe that's what you said from last week. We were breaking up Saturn maybe two. Maybe they don't need the forced exits for maybe a 4 ETH bond, but anything below that they do. Maybe that's what Dave's alluding to here. I mean, we're going to find out more in the coming weeks, I'm sure.
Yeah.
A lot of the team is in Istanbul right now for the conference, so maybe we'll find out more and we'll communicate it here on the Weekly Orbit. But all this is really exciting. The fundamentals are strong. We got a great roadmap. 2024, I think, is going to be great for Rocket Pool.
Absolutely.
Okay, moving on to the next thing. Speaking of upgrades, the long and awaited website. There's hints of it. Darren Langers, he was in Discord. He said, "Sounds like Mav has spilled the beans, but yes, website launched during the event, which I just talked about. I think at Dev Connect in Istanbul.
Yep.
So the new website is imminent. Hopefully, we'll have some new looks by next week's show.
Yeah.
This has been a long time coming. You have any quick thoughts on the website and how it's going to improve the user experience for especially newbies, coming into the...
So I've been teasing for a while that have I seen it, haven't I seen it? I guess now it's fine to say that I actually have seen the new website and what it looks like. I think it looks really good, and Nick has done a really great job with that. And Nick, of course, is the front end developer of Rocket Pool. We don't really see him around much, but he's working around on the stake.rocket pool website and like the main website as well. And I think he's done a really good job. Sleety's done the artwork for it, which is of course beautiful because Sleety's work is fantastic, and it looks really good. I think so. So yeah. But I can't really say too much, but hopefully next week we can go on the tour of the website and kind of show it around what it looks like. But I think it looks really good. Yeah,
absolutely. Okay, and the next item, Notional V3 just launched on Arbitrum and offers attractive opportunities to stack our ETH. You've had the folks from Notional on Launchpad on your own show, and this is it's a strategy where you can take your rETH, you can lend it out, earn yield at a fixed rate or variable. You can also provide liquidity. I believe you can borrow against your rETH as well. What makes this exciting?
Yeah, so one of the things that Notional is doing that no other protocol has done at the moment, and they haven't actually, I need to still get some more details about whether that's going live right now or soon, is they'll be allowing RPL lending and borrowing. So you'll be able to deposit your RPL and take a loan against your RPL, which is risky. So please be careful, but it will be possible, which would be a great use case for the RPL token. With the stuff that they're mentioning here in this tweet thread is, like you said, there's two aspects to it. There is one that you can lend your rETH, so you will get a 1.5% return on that. That's their fixed rate lending. And then they have two liquidity pools that they want you to provide liquidity to. One is just like a straight rETH liquidity pool where you'll put your rETH in there, you'll provide liquidity, and you'll get, I think, around 10%, and then boost it up to like 15 or 20%. And then they have a leveraged liquidity pool. So this is kind of like the folding stuff that we've talked about before, that Aave and some other providers kind of allow you to do. And they'll have their own in-house version of this where they do leverage liquidity. So you'll provide your rETH, and with that you will get into their liquidity pool. I'm not exactly sure of the technical details, but then that will then give you outsized yields and returns. And the way that they're spinning the numbers right now, it looks like that's somewhere around 70% returns, which is an absurd return. So please, of course, be careful. Like, Notional have been around for a few years now. Like, the version 3, of course, is just launching now, but as a protocol, they've been around for a few years. And they're integrating our Rocket Pool's tokens in a really cool way. So that's great. I think part of that yield will be incentivized with their note token that they have. So I don't know how long those incentives will last, but if you are one of the early users of those pools, then there's some really, really nice opportunities for you there. If of course you're willing to take the risks that come with that. So please
Right.
please be aware of that before you take part in any degen activities.
Right. Yeah. Be careful. It's a version 3, so it's new code. Even though they've been around a while, it's and then you got, of course, leveraging is just be careful, do your own research, as they say.
Yeah.
One last, I had a question from a friend of the pod. I just want to end it with, this comes up in trading once in a while. We hear folks say, why do I have to stake RPL to open up a node and become a node operator? Why can't I just use ETH? And I promised that we'd discuss that. It's a very common question. It's a good question too. So you want to take a stab at it?
Yeah, so this actually came up in Reddit last week, where a Reddit community member responded to my post about Val's tokenomics changes and how that's kind of giving a boost to staking, and how your RPL rewards will be outsized at lower collateral levels, and just talking about RPIP 30. And someone replied from there saying, RPL is junk. Like, you don't need RPL. Like, Rocket pools should just be enshrined into Ethereum, and you don't need RPL. So I went and crunched the numbers, and this person had this idea that I could go and just have ETH as the token, and you can use pay a share of your income to like the protocol that could do stuff. So we went and worked out. We said, okay, right now Rocket Pool is working at a loss, depending on how you work it out, because we have $1.75 million, somewhere thereabouts, of inflation every month, but we have around $1.75 million of inflation every month, but around $550,000 or somewhere around that amount of rETH commission coming in. So there's a $1.2 million like kind of loss, if you can call it that. However, if you work out that a big chunk of that's going to node operators, then it's kind of at parity, so there's not too much loss. So Rocket Pool is working. It's got this idea of how to scale, but the costs are real right now. Where do the costs go? We pay node operators, we pay oracles, we pay grants, incentives, we pay development, like we pay all these different things, and that comes from the RPL token. Like the inflation of the RPL token goes towards all of those things. Now, if you were ETH only, I worked out that you would need 16 million ETH staked in your protocol. 16 million, which is like huge, like twice the size of Lido, basically. 16 million ETH staked in your protocol to be able to get that 1% to pay $1 million a month, which would just cover certain things. And of course, if you want to be super frugal and you said it just 100,000, that would still be 1.6 million ETH, which would put you at like 5% of the network, which has taken Rocket Pool 2 years to not even reach that level. So the idea of being able to get the ETH required to get to those numbers is just really difficult, and I don't think possible, probably. And then there's this idea that you could get VC involvement, and then that has its own issues as well. So
Right.
I think Rocket
There's no
Pool, sorry.
there's no free lunch, right? And
Yeah.
Rocketpool has been around for years, and years before they even got the first node operator. We just talked about we're on our second anniversary, but I think the team, they started back in what, 2017? I
Yeah,
want to
end
say.
of 2017. 2018 was the token launch, so they were already working before then. So, yeah, it's
Yeah,
been
they've
going for a
been
long
working for
time.
years. How are you
Yeah.
going to pay How are you going to pay for the development of this?
Well, they'd
People don't
fork
work
the
for free,
code, right?
right?
They'd say that they'd fork the code and like remove the Rocket Pool side of it. So it's all open source. They're welcome to do that. But then you should ask
Yeah.
yourself the question, like, Rocket Pool's been running for 2 years. Why hasn't anyone forked it yet? So, yeah.
Yeah, because it's either you have a token or you have VCs.
Mhm.
I mean, if there's a third way or a fourth way, we just haven't seen it yet.
Well, even with
But
VCs,
you
you
know.
still get tokens as well, right? Like
Oh
Lido
yeah,
and,
of course.
and others. So, yeah,
I guess
there's no way to
you
escape
could
it.
have the RPL benefactor come up with millions to say, here you go. I've got. You can have some of my fortune, right? To run all your costs. But yeah, I don't mean to make fun of it. It is a good question. It comes up a lot, and just the tokenomics and the economics of funding all these expenses,
Yeah.
which are substantial. You
Hmm.
got to have it from somewhere, and
Yeah.
the token is, as far as of 2023, it's really the only way to do it.
Yeah.
So hope that answers that question. But that will conclude this week's episode. It's been a great week, Wack. It's been great
Absolutely.
talking to you.
Yeah.
All our listeners, thanks for joining us. We will be back again next week for another edition. And of course, none of this is financial advice. But
Never.
until then, we'll see you.
Bye, everyone.
Bye bye.